G'day Gain Squad. The world is holding its breath as a single social media post just sent the global financial markets into a total tailspin. We are talking about a high-stakes 2-week countdown that could change the face of the Middle East and your portfolio forever. Today we are tracking Trump's massive new April 27th deadline, the golden rebound, and why big tech is looking like a bit of a galah. Let's see where the smart money is flowing today as we break down the insane oil spike and the geopolitical chess match in Islamabad. We are checking out gold's wild ride back to the top and why the greenback is trying to bully every other asset on your screen. This is for entertainment-only gold getters, so please don't go betting the house without doing your own research and due diligence. The big question today: will Trump's April 27th deadline bring a peace deal or a total energy meltdown for the global economy? Drop your predictions in the comments below, smash that like button, and subscribe to Goldie Gains to keep your portfolio optimized. All right, traders, the headlines are absolutely screaming after peace talks in Islamabad completely hit a brick wall on Sunday, April 12th. Vice President J.D. Vance led the US delegation, but they left without a deal because Tehran refused to budge on their nuclear program. President Trump didn't waste any time and announced a full naval blockade of all Iranian ports starting Monday, April 13th. He has given Iran exactly 2 weeks until April 27th to come back to the bargaining table or face the consequences. The goal of this blockade is to clear the Strait of Hormuz of mines and stop Iran from profiting while the world economy suffers. Trump's post on Truth Social was a proper shocker, warning that any Iranian who fires at a peaceful vessel will be blown to hell. This 2-week deadline has created a massive vacuum of uncertainty that every day trader and fund manager is struggling to fill. However, by Tuesday, April 14th, the market's having a bit of a wobbler because back-channel talks have supposedly resumed. President Trump hinted that Tehran reached out just hours after the blockade started, looking for a way to save face and keep moving. It is a high-stakes game of geopolitical chicken, and that April 27th cutoff is now the most important date on your trading calendar. Gold getters, let's talk about our favourite shiny rock, because the price action has been as wild as a weekend in King's Cross. On Monday, April 13th, gold dropped toward $4,700 an ounce as the US dollar flexed its muscles. Traders were spooked by the blockade news, thinking higher energy costs would force the Federal Reserve to keep interest rates higher for longer. But don't look now, because on Tuesday, April 14th, we saw a massive rebound in the global gold market. Prices climbed back up to the range of $4,760 to $4,770 per ounce. This 0.5% jump happened because news of resumed back-channel negotiations eased the fear of a total military escalation this week. Even with this little bounce, gold is still down about 10% since this whole Iran conflict kicked off back in February. It is a proper battleground right now, with safe haven demand fighting against the fear of a stronger dollar and rising bond yields. For the gold getters watching the long-term charts, this level is looking like a very interesting zone for some tactical accumulation. This is a proper golden entry for those who believe the geopolitical risk premium isn't going to vanish before the next deadline. If you think the gold market is moving fast, have a squiz at what is happening over in the pits for crude oil. West Texas Intermediate, or WTI, surged about 7% on Monday morning as the blockade news hit the tape. Both major oil contracts topped the $100 a barrel mark, which is a massive psychological level for the energy markets. The threat of a closed Strait of Hormuz is a total nightmare because 20 million barrels of oil flow through there every single day. If that supply gets choked off for an extended period, analysts are warning we could see $150 oil. By Tuesday, April 14th, WTI pulled back slightly under $100 as those back-channel peace hopes started to circulate. We also need to keep an eye on the OVX, which is the Crude Oil Volatility Index, because it is reaching scary levels. It was sitting around 78.01 on April 10th, which is extremely high compared to the start of the year. High oil volatility usually means the market has no idea what is coming next, so keep your positions tight, traders. This energy shock is a massive tax on every family and business, and it is keeping the global inflation fires burning bright. Now, let's look at the Magnificent 7 tech stocks, which are having a proper shocker so far in 2026. Every single one of these tech crown jewels, Apple, Microsoft, Nvidia, and the rest, is actually down for the year so far. Smart money is rotating out of high-growth AI bets and moving into real assets like gold, copper, and energy. Microsoft has been one of the biggest laggards of the group, dropping more than 21% since the start of January. Tesla has fallen about 15% as they struggle with sales in Europe and plenty of noise around Elon Musk's latest comments. Apple is down about 6% this year as people start to wonder if their foldable phone innovation is coming too late. There is a lot of anxiety about the $700 billion these big tech companies are spending on AI infrastructure this year. Investors are starting to ask when that massive capital expenditure is actually going to show up as profit on the bottom line. While tech had a tiny relief rally on April 14th, the broader trend is looking a bit dusty for the Nasdaq index. It seems the market is finally waking up to the fact that you can't eat software when the world is in a resource war. The US dollar index, also known as the DXY, is acting like the king of the castle in this high volatility environment. On Monday, April 13th, the dollar firmed up toward the 99 level as everyone rushed to the greenback for safety. When the blockade was announced, the greenback emerged as the strongest performing safe haven asset on the planet for about 12 hours. However, the dollar is being pulled in two directions by war fears and the reality of a massive US debt pile. The DXY index slipped a bit toward 98.3 on Tuesday, as optimism for a deal with Iran began to grow. De-dollarization is still the big elephant in the room that no one at the Federal Reserve wants to talk about openly. The dollar's share of global foreign exchange reserves has fallen to around 57%, which is a multi-decade low. The French have even finished moving all of their sovereign gold back to Paris, which is a massive signal of declining trust. If the dollar keeps losing its status as the only game in town, gold is going to have a structural tailwind for years. Watch that 99 level on the DXY like a hawk, because a break above could mean more short-term pressure on precious metals. Let's check in on Dr. Copper, because the red metal is giving us a very different message than the gold market. On Monday, April 13th, copper futures fell more than 1% to below $5.80 per pound. This happened because a blockade in the Middle East usually means a massive slowdown for global manufacturing and construction activity. Copper inventories in London warehouses have hit an 8-year high, which is a warning sign that industrial demand is soft. The copper to gold ratio is currently sitting at 0.000077, which is a very low reading. A falling ratio usually tells us that the market is in a flight to safety mode rather than a growth-oriented speculation mode. However, copper did bounce back to about $6.02 on Tuesday, April 14th, on the ceasefire hopes. If we see copper and gold prices rising together, it is a clear signal that the market is bracing for massive global inflation. For now, the divergence is keeping the gold getters happy, as the yellow metal remains the preferred hedge against a global slowdown. Keep an eye on this ratio, because it is the best way to see if the smart money is betting on a recovery. We have also got some massive economic data hitting the wires that could send the markets into another wild spin. All eyes were on the US Producer Price Index, or PPI, for March, which was released on Tuesday, April 14th. The annual PPI inflation rate is expected to jump up to 4.6%, which is a huge increase from February. Most of this heat is coming directly from the higher energy and fuel costs caused by the ongoing conflict in Iran. If these inflation numbers stay hot, the Federal Reserve will have almost no room to cut interest rates anytime soon. Higher rates are usually a bit of a drag for gold, but the geopolitical fear is currently overriding all the old rules. The IMF is also holding its spring meetings in Washington this week, focusing on how to maintain global financial stability. They are worried that the Middle East energy shock could trigger a K-shaped recovery where the rich get richer while everyone struggles. For us traders, these meetings are often just a lot of talk, but they can trigger some sudden volatile swings in the dollar. Let's optimize this entry by staying patient until we see how the big banks react to this latest batch of inflation data. Let's see what the gold getters over on the Wall Street Bets subreddit are saying about this wild week in the commodity markets. Sentiment on Reddit has taken a very interesting turn away from tech stocks and toward what they call rocks and dirt. Many traders are posting that the recent software dump is a bottom signal, but a huge crowd is rotating into miners. There are plenty of irreverent memes about the blockade, but the underlying message is surprisingly bullish for every single ounce of gold. One trending theme is that the US military will need to heavily restock after all the firepower used in Operation Epic Fury. Retail investors are buying up gold mining companies at less than 5 times their earnings, calling it the ultimate value play. They reckon the petrodollar era is officially ending, and we are moving into a new era of commodity-backed wealth and security. While you always have to take Reddit advice with a massive grain of salt, it shows the average person is finally watching. When the tech crowd starts talking about gold reserves instead of AI, you know we are in a very different market regime. Just remember, the sentiment on those boards can be as mad as a cut snake, so don't go chasing every single meme. To understand where we are going next, we need to look at how gold has behaved in past Middle East conflict. During the 1990 Gulf War, gold prices surged 13% in just 2 months after the initial invasion of Kuwait. In 2022, when the Russia-Ukraine war started, gold spiked about 9% in just 2 weeks before cooling off. But this 2026 Iran conflict is different because gold has been in a sustained structural bull market for 3 years. Usually, we see a buy the rumour, sell the news effect, where gold prices dump once the actual fighting begins on the ground. However, the constant threats to the Strait of Hormuz have kept a massive war premium baked into the current price. Average geopolitical spikes usually last between 1 to 4 weeks before the fundamental economic forces take back control of the chart. We are now in week 6 of this conflict, and the fact that gold is holding these levels is extremely bullish for the long term. History shows that sustained energy shocks are the best possible environment for gold to outperform the broader stock market for years. If the April 27th deadline passes without a new deal, we could see gold break into a whole new all-time high range. Let's see how this energy shock is hitting our screens and our wallets here in Sydney and across the globe. The Aussie dollar, or the Aussie dollar pair, has been surprisingly resilient, trading between 0.70 and 0.71. Even with the greenback acting like a bully, our commodity-backed currency is holding its ground like a champion this week. Traders are looking at the ASX 200 index as a potential hideout, while the US tech indices are having a moment. The local energy stocks on the ASX have been some of the only green on the screen over the last few days. It is a classic rotation where people are ditching expensive software to buy the stuff that actually comes out of the ground. Gold mining companies are especially interesting right now because their profit margins are expanding faster than a balloon at a party. Even though their fuel and diesel costs are up, the high gold price means they are gushing cash at an incredible rate. Smart money is starting to realise that these resource companies are the place to be for the rest of 2026. It is all about protecting your highlights and making sure you don't get caught in the big tech downdraft this month. The market is currently stuck in a reality assessment phase as we wait for that April 27th deadline to arrive. The immediate fear spike from the start of the blockade has passed, and now the smart money is looking for long-term value. Don't sweat the dip, gold getters, because these corrections are a healthy part of a massive multi-year golden bull run. We are seeing a paradigm shift where gold is no longer just a luxury, but a critical part of national security infrastructure. Central banks aren't selling their gold during this dip, they are actually using it to diversify away from the US dollar system. This creates a massive floor for the gold price that simply did not exist during the commodity booms of the past decades. So to wrap it all up, we have got Trump's April 27th deadline hanging over the world like a dark Sydney storm. Gold found solid support at 4,700 and is rebounding on new hopes for back-channel diplomacy with Iran. Oil prices are back above $100, putting a massive squeeze on the global economy and your weekly petrol bill. Big tech is feeling the fatigue as the Magnificent Seven continue to underperform the broader SP 500 index this year. The US dollar firmed up on safe haven flows, but de-dollarization is still a massive long-term threat to the greenback's dominance. Resource-heavy markets like our own are proving to be a resilient sanctuary for global investors as the Aussie dollar stays strong. And the latest inflation data is showing that energy costs are flowing directly into the prices of every single thing we buy. Now it is your turn, gold getters. Do you think the April 27th deadline is a bluff, or are we heading for a bigger fight? Let me know your price targets for gold in the comments. And tell me which of the Mag 7 you are ditching this month. Make sure to like this video and subscribe to Goldie Gains so you never miss a beat in these crazy global markets. Keep your positions tight and gains golden. I'll see you at the next close. Cheers.